You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody, to a live episode. Well, we're not live, but we're in person in Melbourne. It's good to have you back. Finally, it's been you came down a little bit earlier in the year, right?
Did I? Yeah,
I think so, right?
I think so, probably.
Because I think we've definitely recorded one in here at my place, and I think that must have been this year. So
right, okay, yeah, no, it's good to be back. Thanks for having me over to your place. We got the cameras set up at Hamish's second bedroom. It's quite nice. A good spot for recording a podcast. Hopefully it's not too echoey. That's the only thing that
it is a little bit echoey. Yeah. I haven't showed you. Yeah.
Sorry, what were you going to say?
I was going to say, I haven't showed you in my office how I've put up kind of sound blankets on the walls. I should do that in here as well.
Yeah. Well, you probably don't use this space very much.
No. It's probably not like it's set up like this all the time.
Yeah. No, exactly. No, but no, it's good. Good to be back in Melbourne. Yeah. We had a good time last night going out to that gin bar. That was good.
Well, we did the classic, we'll just have one or two drinks. And then it went a little bit more than that. But
now we're a bit sleepy for the podcast. So. But I was listening during the week. Michael Lewis, who wrote The Big Short?
Yes.
I was listening to a podcast that he did, and he was talking about, how The Big Short came to be and blah, 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 just writing it. And then at the end of the podcast, the interviewer was like, so what's your next book? What are you working on? And he had just spent like 15 minutes talking about basically how sometimes he's just so lucky in life that things like fall into his lap, or that his naturally curious mind takes him down the right path. Anyway, it turns out, and I cannot wait for his book on this, he's spent the last like 3 months with, can you guess who?
I'm hoping it's FTX related.
Yeah, Sam Bankman-Fried. He's been following him around like in the office for like the last 3 or 4 months or something, just gathering intel. Because that's what he did with not The Big Short. With Moneyball.
Oh, Moneyball.
Yeah,
right,
yeah.
Of course.
He went in and followed the guys around in the office and like the what are they called? The Oakland A's or something like that.
I can't remember exactly what the team was. Yeah.
But yeah, so he was following around. Sam Bankman-Fried. So that's going to make
crazy.
A very interesting book. See how that goes.
That always seems to happen. Like there's always like a journalist who's like following someone, and then something eventful happens that they didn't expect, and their book or whatever whatever they're creating has kind of taken this like dark turn. So that's crazy. Yeah, there's going to be a ton of interesting documentaries, and there'll definitely be a movie about the situation
for sure. Do you see that they already made that? The GameStop saga into like a doco.
I saw on Netflix, right?
I haven't seen it. Have you seen it?
I haven't seen it either. I just went through all of that last year. Like I don't know. It kind of be just like revisiting a story that we covered so much.
That's the thing. I actually am not too interested in watching it just because we've covered it so extensively when it actually happened that I feel like we're not going to learn anything new about what happened.
Yeah.
It was funny we were talking last night how GameStop's like still like not doing all that badly, which is kind of mind blowing. Hey, like in terms of stock price.
Yeah, I mean, especially this year. I mean, a lot of stocks are down a lot. I think GameStop was down like 30% or something, which is a lot, obviously. But in the scheme of
it's not like a 70, 80%. Like that's what I would have tipped. I would have tipped like 70, 80, 90% loss.
Yeah, like a complete collapse.
Yeah, but that certainly hasn't happened. Not like crypto or something like that.
Yeah.
What were we talking about today, Hamish? We're talking about, that's right, Bob Iger.
A little bit of an update.
You were saying the town hall he was going to do, that was on Monday, wasn't it?
Yes.
And then we got a little bit of Fed stuff to talk about. Not too much because it's pretty much the same as last week, but Jerome Powell's just saying some stuff in the media. Elon Musk. This is like the same podcast as last week.
Yeah.
Do we update the doc?
Yeah, it's always Fed, inflation, Elon Musk, Bob Iger.
Bob Iger from last week.
Yeah. No, so, I want to take us through, I know we're a little bit premature, but because we're here in person, I want to take us through the predictions that we made at the start of the year on Bitcoin and the stock market, interest rates, because there's some really interesting things. I went through and listened to what we said about interest rates and expectations. And it's really interesting to kind of see what we thought back then to what actually ended up unfolding. I know we're a little bit early, but it's really interesting. So I want to cover that today.
Well, that's probably back when we were talking like when the Fed was saying like, oh, we think there might be 0.25%.
Exactly what it was.
Oh, really?
Yes.
That's so funny.
Yeah, and there was no rate hikes at that point that had happened, I believe. So,
Right.
they just stopped the quantitative easing.
Right.
Yeah, it was very, very interesting. But yeah, there'll be a bunch to cover on that. So
All right, should we do it? Let's jump in.
Live
read.
Live read.
Let's go.
Pressure's on.
I'm going to stare intently at you while you read this.
No, don't do that.
All right, I'll look this way.
Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically or you can do it one by one or you can use Excel, however you want to import your trades. And once you do that, it will allow you to track all the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you. Currency gains, particularly if you're buying shares internationally or hold foreign currencies, that's a big one at the moment. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio, diversity, and that sort of thing, as well as used at tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, track up to 10 holdings for as long as you want, or you can also use that link to get 4 months off a yearly subscription if you want to sign up to more features.
Yeah, nice. So
there you go.
Flew through it. Should I get the Fed out the way? And then
let's talk Fed and then
about Bobby Iger after that maybe.
Yes, that sounds
Robert.
good.
Okay. So what have I written here? This is from CNBC. Federal Reserve Chairman Jerome Powell confirmed on Wednesday that smaller interest rate increases are likely ahead, even as he sees progress in the fight against inflation as largely inadequate. Echoing recent statements from other central bank officials and comments at the November Fed meeting, Powell said he sees the central bank in position to reduce the size of rate hikes as soon as next month. So this is kind of what we were talking about last week. But he cautioned that monetary policy is likely to stay restrictive for some time until real signs of progress emerge on inflation. Quote, despite some promising developments, we have a long way to go in restoring price stability, Powell said in remarks delivered at the Brookings Institution. The chairman noted that policy moves such as interest rate increases and the reduction of the Fed's bond holdings generally take time to make their way through the financial system. Quote, thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down, he added. Quote, the time for moderating the pace of rate increases may soon come to an may come as soon as the December meeting.
Right.
So there you go.
It's interesting that they still say may, even like they may slow down, even though we're at the beginning of December. I think the meeting is the 14th or the 15th of December.
Right.
So it's in 2 weeks. I mean, I guess they never want to be certain we're going to slow down in case something happens in the next 2 weeks. But you would think they'd have a pretty good idea of what they're going to do.
Yeah.
So
we might do this, guys. You know, we might.
Yeah.
We might.
We may.
Exactly right. Yeah. But I mean, this is, I don't think this is anything new really.
No,
it's just a clarify. I mean, it's more confirmation, I guess, of what we were talking about last week, which is the Fed minutes.
Yeah, I mean, they're definitely moving. Sounds like they're trying to move more neutral than much more aggressive that Powell has been, over the past few months about, we're going to keep fighting inflation and waiting until it goes down. But given I think inflation's down for 3 or 4 months, I think now in a row. Yeah. And maybe it's going to be a 5th, given this is coming out from the Fed now. I would imagine the next update we get will probably continue to see inflation decline or at least stabilize. It kind of makes sense to see the Fed kind of slowing down.
I'm trying to get to Trading Economics, which is a good website. Yeah, so we've gone down 1, 2, 3, 4. Yeah, 4 months in a row now, which is pretty crazy. So we're down to headline rate of 7.7. I didn't realize it was 7.7. I thought it was higher than that still. Okay, back to the Google Doc, going everywhere. Yeah, just to add to that, he did say, quote, it is likely that restoring price stability will require holding a policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy.
Yeah.
We will stay the course until the job is done.
Yep.
So I think that makes fairly good sense. I mean, unless you have to do big interest rate hikes, you wouldn't. But at the same time, 7.7% inflation is not low enough.
No, it's exactly.
They're going to keep going.
Yeah, it's come down for 4 months in a row, but it's still insanely high. And I think I can't remember the specific figure off the top of my head, but I think the month over month is still in the 5 to 6% annualized rate. So
right, okay,
so it's still quite high.
Yeah.
So we'll kind of see what happens. Did you see what happened in the markets last night on all of this news?
Did it go up?
Yeah, a lot. So
really?
we had the S&P 500 was up 3%, which is a massive day.
Yeah.
NASDAQ was up 4.4%.
Wow.
And here's some names for you. Tesla, Netflix, Alibaba, Meta,
how's my
Google.
Tesla going? How's my Tesla going?
6 to 8% on the day.
Shit, NASDAQ.
Which is massive. Most of those that I just named were up 8%, which is kind of crazy how much that's just a perfect example of the Fed, just imperfect influence. I mean, they didn't actually do anything. It's
they just said something.
They just said, maybe we'll slow rate hikes, and everyone kind of models down their projections of their discounted cash flows. And
you think about these companies like going up 8%, let's just round it to 10 to make it easy. It's like what one man said in like a meeting has made like these some trillion, some not quite, but let's say $1 trillion companies go up like almost 10%.
Yeah.
Like, what?
It is kind of absurd.
What?
It is ridiculous. And it just kind of shows the absurdity of how sensitive kind of Wall Street modeling is on future cash flows, that if now the expectation is maybe a 0.25% hike instead of a 0.5 or a 0.5 instead of a 0.75, just that minor change has like a massive impact on what they value the business at, because they're constantly updating the valuation to do with what the live interest rates are, expectations for interest rates, which is actually absurd if you really think about it, because we really don't know where interest rates will be long run. They've shifted so much in the last 12 months. Who knows where we'll be in the future? And our terrible predictions that we'll talk about a little bit later is evidence of that. Actually, we were not too bad. We got some that were better.
Oh, really? Okay.
I remember last year we were wrong on everything. We were absolutely wrong on everything. But yeah, this year we were 50-50. So
okay. I'm interested because I actually don't know. I haven't looked in the doc. I haven't looked ahead. So.
I mean, should we just jump into it? I mean, we can just go through it.
I mean, sure, if you want. What were our predictions for this year? So what sort of stuff did we predict?
Yeah, so
we probably predicted everything.
So we did a bunch. So we did we had some about COVID, whether it'll still be relevant or not, and restrictions. We had interest rates, Bitcoin, GameStop, Tesla.
Oh gosh,
S&P 500. There's a lot. There's tons here.
Wow.
So yeah, first of all, I wanted to say last year, because in the same podcast from the beginning of the year, we looked at last year's predictions. We got everything wrong. We thought that everything would be down. We thought 2021 would be the disaster year because a lot of the quantitative easing and the money printing, we thought that was all going to come in. That seems to have happened this year. So we're 1 year early basically on that. So last year it was a complete disaster. This year we did a lot better.
As a long-term investor, I think we can take that as a W.
Early
predictions don't matter.
Yes.
We're looking 10 years into the future. So I'm saying all of those incorrect predictions, I'm giving us a big tick.
Okay. Yeah. So let's start with the first one. COVID prediction. Will COVID still be relevant for most people was really the question. I said, we'll still be talking about it a lot. Restrictions, I said still significant restrictions, particularly on international travel, but less than there was at the time. And then I said, but things will be much better than they are. So that's kind of like half right, half wrong. Certainly on the restrictions, significant restrictions does not exist.
No,
that's
now.
That's a clear wrong. Still talking about it? Not really. Like it's not a daily news cycle for sure.
Yeah, not anymore.
No.
It's so weird. Like the daily news cycle was just all COVID.
Yes.
That's all it was.
It's crazy.
And now like we just don't talk about it anymore. I don't know.
Yeah.
I kind of feel good that we've gotten past it, to be honest.
Yeah. All we really hear about COVID right now is China's lockdowns.
Yes.
So it's COVID, but not in Australia.
Yeah, exactly.
So you said if Omicron, which was the strain at the time, continues to spread, we will be talking about COVID much less. And your theory was that if it spreads widely, it will kind of run its course.
Yeah.
And you said less restrictions on international travel. So you were pretty much bang on.
I take that as a W.
Yeah, that's a W for you.
Thank you.
I'll give myself a W for things will be much better. Yeah, I get half a point.
Half a point. I'm on 1 point. All right. Nice.
That's about as good as it gets.
Man,
it's all downhill from
guys.
here.
Honestly, I've never made like a good accurate prediction in my life.
Yeah.
So I'm taking that. Well, this is why you need a 50% margin of safety, goddammit. This is exactly why. Because whatever you think is going to happen does not happen.
Yeah. And that prediction's about as good as it gets for us. It's all downhill from here. No, I think there's it's a bit of a mixed bag. So next one was interest rates in the US. So we only spoke about US. I'll start with you. You said 3 to 4.25% hikes, but definitely more than 0.75. So 3 to 4. Oh, sorry, you said 3 to 4 to 5. So your range was like 0.75 to 1.25 in total. But you also said, and this is your half point here. You also said, I wouldn't be surprised if rates are at 3 to 4% by the end of the year.
Wait, what are they?
Which we are right now at 3. And after the next meeting, which is the last meeting of the year, it will be 3.5 probably. So
come on.
You've cheated because you've said 3 or 4.25 hikes. And then you've said, but I wouldn't be surprised if it was
half point.
That's a half point.
Half point. It's got to be but somewhere between 0 and 20%, I'd say, the interest rate at the end of the year. So therefore, that's what I should have said. No, I'll take a half point for that. You're right. But that's just like a classic. I should have gone on CNBC with that hot take. Being like, look, I could see a few 0.25% rate hikes, but I wouldn't be surprised for it to be much higher potentially. Or it could be much lower, you know. We just don't
or
know.
Even, negative rates. And then you just clip the bit.
Exactly. Clip the appropriate bit and that's, there you go. Now you're a well-respected finance influencer.
Exactly.
You're a Jim Cramer or a Gary Vee or something.
Yeah, exactly.
What did you say?
I was much worse. So I said we will have more than expected. So they were expecting 3.25 hikes at the start of the year. So that's the context.
Yep.
And I guessed 4. So 1% in total. And my reasoning behind that was because I expected inflation to continue to get worse throughout 2022. So that last statement is correct, but I was way too
you're too lenient,
way too dovish on how many hikes.
There you go.
It is a very interesting perspective. We've said this over and over again that you just can't know, and what you think is reasonable could very well change so quickly.
Yeah.
And at the start of the year, we're like, 0.75, but okay, fine. Maybe it's 1%. Maybe it's 1.5%. But here we are at 3.5%.
Inflation at 7.7.
Exactly.
That's crazy.
Yeah.
Like I can't remember the exact quote. What does Peter Lynch say about macroeconomics? There's a great quote from him from that. That 94 lecture that we watch and quote on YouTube. It's something like if you spent like 10 minutes on macroeconomic predictions, then it's like 10 minutes of your life you never get back kind of thing. It's just like basically just saying just don't bother. Like nobody knows. And if you listen to macroeconomic predictions, then you're just a fool because nobody knows. So if nobody knows, then why bother thinking about it? And that's like the classic, that's like the argument for the style of investing that we do. Like nobody knows what's going on in the macro. So just focus on individual businesses instead. Yeah.
100%.
Yeah.
All right, next up, S&P.
So hang on, no. So I'm. Do I get half a point?
You get half a point. So you're on 1.5, and I'm on 0.5. I definitely got that wrong. I said only 4 rate hikes. So that's
all right.
So I'm on 0.5. You're on 1.5. Okay.
Come on, get around it.
S&P 500.
Oh, here we go.
Up or down. So we didn't really give specific. We'll do this next time. So at the start of the year, in a month, we'll do our next predictions. We won't do them now, but we should give like a specific percentage because that's more exciting. I feel like if we get it right, then that's insane. So
that's true.
But we just did up, down, or flat and give or take percentages. So I said approximately flat, give or take 5%, and you said down. So that's a point for Brandon because the S&P is down 17% so far this year. And just a couple of weeks ago, it was down 25%. So it's actually it's kind of come back quite significantly. But
very helped out by last night, I guess, a fair bit as well.
And I'm going to put my point on hold for this one because we've still got a month to go. And with the Fed news that just came out,
actually, no,
it could be made up.
I have to revisit.
There's no way it gets neutral.
I'll definitely take my point now just to be safe.
Yes, yeah.
So I'm 2.5 points for me now.
Yeah, Brandon's doing much better than me.
Oof. I'm doing great. What are you talking about? This is fantastic. I'm crushing you here.
Yeah, exactly. On this same topic, I was throughout this whole conversation, it's a very funny podcast because I was reluctant to give any predictions because I hate making yearly predictions.
I probably forced you.
Yes, exactly.
I was probably like, no, you have to. You have to.
and I gave a backup prediction, which was a joke. We joked about it.
Okay,
and the backup prediction was inflation's going to be 15%. 10 rate hikes and the market will go up 20%. And we laughed about that. But that's actually better than my other predictions. 10 rate hikes, 2.5%. That's exactly what happened.
Yeah. It's just been grouped together in less rate hikes.
15% inflation, like pretty not too
we
far
got
up.
to 10. Maybe if we were in the UK, it might.
Yeah, exactly.
Get up there.
Yeah, maybe if you're taking the,
That's
the 80s figure or whatever it's called, the shadow stats figure.
Yeah, actually, the shadow stats. Yeah, that's hilarious.
So I just thought that was funny. We cackled at the idea that inflation was 15%, but honestly, it wasn't that far off it, which is kind of crazy.
We got almost 2/3 of the way there.
Yes,
That's insane.
All right. GameStop, we kind of spoiled this one a little bit earlier because we know GameStop is now down 33%. But I said that I'm pretty confident that it will be down. So I was right.
Oh, there you go.
Yeah. So
Nice.
that's what I said. And all you said was, I agree. So that was a pretty.
I'll take it.
That was a pretty straightforward one. Yeah,
I'll take it.
you get a point for.
Nice.
Yep.
Wait, what am I on now?
3.5, I think.
3.5. I'm on 3.5.
And I'm on 1.5.
1.5.
Yeah.
Nice.
Tesla.
Oh, here we go.
Here we go. This is interesting. So, so you said it would be flat, but you said that operationally they'll be strong, so they'll have a really good underlying business. But because they're overpriced, that the stock
growing
won't go
into
up. They're
their
growing.
valuation.
That's exactly what you
Yeah.
said. They're growing into their valuation,
Which is true to that operationally bit, but I don't think I got the flat bit right.
they're definitely not flat. They're down 55%.
Yeah.
So, yeah, they're down a lot. Maybe a little bit less after last night. I put these figures in before the 8% boost last night. But
true.
You also said full self-driving won't be finished this year, which is correct.
So far.
They're still in beta.
So far, not
although
finished.
they're getting seemingly relatively close. I guess it depends what you mean by finished. Is finished, it's usable, or is finished, it's
a long way
fully
from finished.
Yeah, it's a long way from being you could be confident in shutting your eyes at the wheel kind of thing.
I call finished full self-driving is that you're legally allowed to go to sleep.
Oh, legally, okay.
Yeah,
So,
legally allowed to go to sleep and drive home.
Yeah, I mean, they're definitely not there. That's it's pretty easy. I can probably say it won't be finished at the end of next year.
Because, I mean, it's in the name really when it's like full self-driving.
Yeah.
Full self-driving.
Yeah, well, that's the whole thing, right? There's a bunch of people suing Tesla, I think, right? Because they've sold this package as being full self-driving. But and it's not yet. But
in Germany, they're not allowed to call autopilot,
right? Okay.
which is crazy.
Yeah.
Well, it kind of at one point I was like, oh, okay, so you don't want to like mislead people, so it's on autopilot, which maybe for some people means you don't have to pay attention. But actually, Elon's rationale was that no, autopilot is the perfect name because they took it from aviation, which is like when a plane's on autopilot, the pilots are not asleep.
Yeah.
They're still paying attention.
You'd hope.
Yeah, exactly. Like autopilot doesn't mean the plane's going to fly itself, land itself, and you can just go to sleep.
Yeah.
So it's like that's why we named it that, because that's what the car does. It doesn't mean you can't pay attention. It just means that the actual controls are going to be done by the car. It's the perfect name for it, really, if you think about it.
It is, besides that as well, it is just a great name, autopilot. It sounds great. Yeah, I'm just going to shut the car on autopilot,
Yeah.
Put a movie on.
I wish that'd be the day.
All right, last prediction.
Wait.
Oh, sorry. So what happened with that? So you get a half point, I guess, because you
Do
said,
I get a half point?
Well, you said operationally they'd be strong, and you said that
I get a quarter point.
You gave a lot of information. So the areas where you get points is where you give like,
Okay.
oh, it could be 1, it could be 4. No, I give you a half point for that.
Oh, sick.
What did I say? I said
4 points for me, I think.
if I look at the business rationally, it should be flat or down. So that's like the easiest call of all time. I mean,
Nice.
I'll take a point for it, but
Yeah. Nice. Yeah, definitely take a point for that.
yeah.
All right, so I'm on. Wait, was I
You're
on
on 4.5?
I'm on no, I'm on
5
4.
point.
4.
Oh, sorry, you're on 4. Yes.
So I got a half point.
And I'm on 2.5 now, I think.
All right.
Yeah.
Catch me.
All
Come
right.
on.
Last one.
Oh, you can't catch me.
What is it? It's Bitcoin.
Oh, okay.
Bitcoin, which is
Surely
down,
we said it was going down. Surely we said it was going down. No? Oh my gosh, no.
which is
on.
down 62% year to date.
Did we say it was going up? Oh my God. What were we doing? Surely
so
we were
here's the-
joking. Surely we were joking, dude. Surely. Come on.
Hang on. So here's the context. So last year, we said that it was going to be down. So this was last year's 2021 prediction. We said at the start of the year it was going to be down.
Okay.
We're super confident about it. Yeah, it's speculative. It's got to collapse. And I think it was up something like 50% during the year. Right. So starting the year, I was extremely fed up with Bitcoin. You said it would be down, like a rational human being. I said it would be up.
Sucker.
I wanted to do something crazy, but I was wrong. I should have stuck to my guns.
That was your Hail Mary.
Yeah, that was my Hail Mary.
Yeah.
So you finished with a final point on 5 points. Nice round 5 points, and I'm on 2.5 points. So better than us last year where we both got 0. So we've improved slightly,
Nice.
but it is fun. Yeah, we're gonna we'll do more. I think we'll do it at the start of the year as our kind of intro episod. But
first
we'll definitely pick out some interesting things. I like that we did like GameStop and Bitcoin, some kind of relevant, individual company, and Tesla, individual companies at the time, so we can do a similar thing.
Yeah, I think we should do that. That'd be awesome. Yeah. Maybe you can leave us some ideas in the comment section of things that we should make a prediction on.
Yeah, will SBF actually be in prison, or will he still be doing speeches for New York Times? Which is it going to be?
Getting paid $100,000 a speech or some shit.
Yeah, exactly.
That's hilarious. No, we could branch out. We could go, politics. We could go world events.
Yes, we could.
We could just predict everything.
Yeah.
Just turn ourselves into the ultimate clippable people.
Yes, exactly. Will Trump tweet in 2023?
Yeah. We can do we can do so much stuff. No, that sounds good. All right. Well, I'm going to take the W on that. Thank you very much, everybody. Round of applause. F's in the chat. F's in the chat. Oh dear.
All right, where do you want to go from here?
Let's talk about Bobby Iger.
Bobby Iger.
Robert Iger.
Yeah, so we spoke about last week. Bob Iger is back at the Walt Disney Company, Bob in, Bob out. And
That's great. Bob in, Bob.
It just works great.
It does.
And on Monday this week, he hosted a town hall for employees, which I couldn't find. There was press there, so we have a bit of information about it. But I don't think it was video recorded.
Oh, okay.
Maybe it was. If someone has it, then feel free to send it to me because I couldn't find it.
Yeah, I'd
for
like
the
to
life
see it.
of me. I could only find quotes and photos.
Right.
So I'm guessing maybe it wasn't recorded, which seems reasonable if it's a town hall for employees. But I'd kind of hoped that it would be recorded. But he spoke about a lot, about his strategy for the business going forward. Nothing concrete. I was kind of hoping for a bit more meat on the bone kind of thing. But he gave a bit more of a direction he's going to take the company. So there's a couple of categories. We'll start with streaming. He said that Disney is going to give priority to profitability in streaming over subscriber growth, and they're going to move away from spending aggressively to increase subscribers.
Interesting. So this is, sorry to butt in, this is the inflection point because we knew what Disney were doing. We knew that they were running at a loss. We knew that they were undercutting. We knew that they were going like hell for leather trying to get market share. So interesting that they feel as though, because how many subscribers they're like? I think total, if you include everything, they got more than Netflix, but Disney Plus is still lagging by a fair bit.
Yeah, so like Disney Plus in the US, I think is about between 50 and 60 million versus Netflix, I think 73 million or something like that. So in their main US market, they're a bit behind, but you look at like India, they've got a massive audience in India that are paying kind of $1 per month kind of thing.
The Hotstar guys.
Yes. But it is interesting to say he didn't say specifically whether they're going to do price increases or lower content spend, but saying they're going to move away from aggressive spending to increase subscribers seems to suggest that content spend, definitely marketing spend is coming off, but probably content spend you would imagine to get to profitability. Rather than kind of chasing higher subscribers. Yeah. Which is, interesting to see. And it means that they'll probably be able to get profitable next year, you would imagine.
Right.
Whereas, chasing subscriber growth, it's maybe a bit of more of an uncertainty of how long it's going to take them to get profitable.
Well, yeah, because it's not your KPI. Profitability isn't your KPIs.
Yes. Yeah, exactly.
So you're like, it doesn't matter that we're not profitable because we weren't trying to be. We were trying to increase subscribers. Yeah. We increased subscribers. So, yeah.
So it'll be interesting to see. I think they'll probably still do kind of quarterly price increases or annual price increases like all these streaming services do. Yeah. But it doesn't seem like they have any. At least he didn't indicate any plans to do massive price increases. So that's kind of what he said on streaming. He was asked about the broadcast and cable networks, so their legacy businesses, which the big assets are ABC, which is a broadcast network in the US, ESPN, and the Disney Channel are kind of their three big assets, although they have kind of a basket of them. And his quote was, if you look long-term at the future of linear TV, it would be wise to be skeptical or pessimistic about it.
Ooh.
However that manifests itself in our company, I don't know. And that's really interesting to me because that's obviously a huge part of their business. It's one of the most profitable parts of their business. And his answer was kind of a dodge. Like he said he's pessimistic about it, which is kind of, obviously you kind of have to say that. But he said, I don't know, which leads me to kind of think about what I was saying last week, which is potentially they're going to spin off some of those assets and he doesn't want to announce it yet.
Yeah.
That statement, you can't really read too much into it. It doesn't really, saying I don't know about what you're going to do about a major part of their business, I feel like that's him not wanting to talk about what he's going to do with it, whether he's going to put it all into streaming somehow and just cut the assets off or sell them. I don't know. Yeah, I don't know.
The thing is, like, if a CEO of a big corporation says that they don't know about something, they definitely know. They definitely, like, there's no way Reed Hastings like, oh, what do you think about Netflix and fucking adding more subscribers? Or they definitely know. They definitely know what they're doing. Yeah. So I think it's definitely a case of, we know what's going to happen, but we just don't want to
detail it yet.
Talk about it yet. Yeah, exactly. But, I wouldn't be surprised if they do something and spin these businesses off. It's interesting as well. One of the points I was going to raise is that, if they do get rid of some of these assets, Bob Iger, he would be a shrewd businessman because he's got such an attachment to ABC because that's how he came up through the company. So it have to be pretty. I feel like if you came up through the company in one area, you'd have like a bit of a soft spot. But if he does be like, look, I'm pessimistic about broadcasting cable out into the future. Let's sell these. I don't. That'd be a big call. But there you go.
Yeah. That would definitely be tough. I really don't know what they do with those assets. It's because they are just going to slowly decline over time, and it's a matter of, do you try and get money out of them now through a sale? Yeah. Where you can get some cash up front, or do you just leave them and milk it kind of until it's done? Yeah. I don't know. It will be very interesting to see kind of how they play that out. On the hiring freeze, which was put in place by the Bob that is no longer there, Bob Chapek, that will stay in place. So all of those policies are going to stay in place. And he spoke briefly about the rumors that Apple might make an acquisition of Disney.
Oh, really? I've not heard about that at all.
Yeah, it was in the rumor mill on the grapevine last week that Apple might be interested in making a bid for some of Disney's assets. And Iger was quick to dismiss the rumors.
Yeah, I don't think that'd ever happen.
He said, he also said that there's no acquisition plans for Disney making acquisitions. So he said, I'm very comfortable with the set of assets that we have, and I think they can serve our company. Don't expect any headlines about deals, headlines soon about deals. So there you go. No plans of acquisitions, which makes perfect sense.
I don't think, honestly, I feel like, because it's like the Walt Disney Company, like it's Walt Disney's kind of legacy. I just don't think that they are selling. Like they would sell out to another company unless it was like you sell out or you're dead kind of thing. I just don't think it would happen.
Yeah, that makes sense.
I don't know. Maybe there's not that kind of clause or not that kind of legacy clause in how to run Disney or something. But they are the kind of business you would imagine that would remain independent.
I could see them potentially selling some assets, not the entire Disney brand, but maybe selling some of their legacy assets or some of their film studios or something like that. But I think it seems like they're not going to be doing that.
Man, imagine going to Disneyland and you buy your ticket, walk through the turnstile, and you have to walk through an Apple store. Yeah. Just to get inside.
You need an iPhone to get in.
You need an iPhone. Yeah, everybody just tap your iPhone. That'd be pretty funny. I don't see Apple acquiring anything. So were they just talking about selling their media set or just selling the whole flipping company?
I mean, it was just rumor mill.
I
actually have no idea where it came from. I just saw a couple of articles pop up. They were like, Apple might be making a bid for Disney for the entire
Disney,
company.
For the entire. See, that to me just sounds ridiculous.
Yeah, it does seem kind of insane. I mean, it would be handy. I mean, it's so funny with these massive tech companies like Apple and Google and Amazon. They just have such deep pockets that it can provide value, I think, to a business that's trying to grow a streaming platform that just needs endless money coming in, because it's really a matter of, it's a race to scale in my view, who can get to profitable scale.
Yeah.
So having someone like Apple with deep pockets to like just constantly fuel streaming growth until they get profitable, I think would be valuable. But yeah, other than that, it's hard to imagine what kind of synergies there would be between the businesses, except Apple being like, well, Disney content's on lock now.
Yeah. No, true. So that was it. That was the town hall.
That's all we've got so far. Guess we'll wait till the next quarterly update to see what changes Disney's going to be making.
Imagine like next quarter, like we'd like to announce that we've come to an agreement with Apple.
Yeah.
What the hell had actually happened? That would be a monster deal. That would be ridiculous, but I just don't see that happening.
Yeah, that would be insane. I think what's Disney's market cap, like 150 billion or 200 billion or something like that?
I am about to find
it
out.
Would be. Oh, my phone just went off. Sorry about
that. It is 178 billion.
Yeah, so the deal would have to be probably in the 200 billion range. Like that is massive.
If you what's the average premium? They'd probably have to pay a significant premium for such a large company. So 30% premium at least, maybe.
Yeah. So over 200, 220, 230.
Yep. That's crazy.
Billion, which would be humongous. So there you go. There you go.
All right, let's talk about. Speaking of Apple, let's talk about Elon Musk absolutely sending fireballs at Apple. Oh, this is hilarious. So, what have I written here? Yes, Elon Musk, as we know, wants to increase Twitter's revenue through subscriptions. Yes, that is correct, and they want to become less reliant on advertisers so that they can open up the platform to more free speech. This has obviously led to some interesting stuff like the $8 blue check mark. And I'm just like reading what I actually just wrote down yesterday. $8 blue check mark, and also restoring many accounts that were previously banned. For example, Donald Trump and Jordan Peterson, Babylon Bee, etc. Now I can read what CNBC said. But Musk's plans for Twitter could be put in conflict with two of the biggest tech could put it in conflict with two of the biggest tech companies, Apple and Google. Tensions are brewing. Oh, you like that in a CNBC article. One of the biggest risks to Musk's vision for Twitter 2.0 is the possibility that his changes violate Apple or Google's app rules in a way that slows down the company or even gets its software booted from the app stores.
Wow.
Yeah, and I was just trying to read I was trying to get a sense of what's in these rules.
What's the specific rule?
What are they going to get kicked out for? I couldn't really find it. I don't know. I think maybe you can only see it as if you're like an app developer or something.
Okay.
I did see something apparently in Apple's App Store review guidelines. One of the earliest warnings the company makes is that apps, quote, apparently this is a real quote, should not include content that is offensive, insensitive, upsetting, intended to disgust, in exceptionally poor taste, or just plain creepy. How funny is that?
Who's written that?
I kind of hope that's
so
actually
it's kind of
line.
a content moderation from Apple's standpoint about the apps that they have in their store, which is interesting.
But I guess it makes sense that Apple keep that vague so that they can.
Oh yes, so they can do whatever the hell they want
yes
legally.
Yes to you, no to you. Yes to you, no to you. Oh, it breached it because we thought you were being insensitive.
Yeah. I mean, that policy could apply to pretty much any social media platform. Even, taking Twitter's changes and the people they're bringing back onto the platform. I mean, there's clearly some of those things that you just mentioned are on Facebook, on Instagram, on everything.
Yeah,
TikTok.
Exactly.
So if they're actually applying that broadly, then it would apply to everything.
Yeah, it's kind of interesting. Yeah, so tensions already. Musk complained in a tweet just last week about how App Store fees that Google and Apple charge. Oh, no, he was complaining about that last week on Twitter. Yes. Quote, App Store fees are obviously too high due to the iOS-Android duopoly, Musk tweeted. Quote, it's a hidden 30% tax on the internet. In a follow-up post, he tagged the Department of Justice's Antitrust Division, which is reportedly investigating App Store rules. His complaint is over the 15 to 30% cut that Apple and Google take from purchases made inside apps, which could eat into the desperately needed revenue from Musk's plans for $8 per month $8 per month for Twitter Blue subscriptions.
Yeah.
Last weekend, Phil Schiller, the former head Apple marketing executive who still oversees the App Store, apparently deleted his widely followed Twitter account with hundreds of thousands of followers. But interesting, now as a follow-up, I mean, Musk is really going for the jug. He loves to just pick a fight because I think now he knows he's just got so many followers, so many, like, it's a cult. I'm part of it. I love the Elon Musk cult. But yeah, as a follow-up, Musk tweeted on the 29th, Apple has also threatened to withhold Twitter from its App Store, but they won't tell us why. So...
yeah, it's very weird.
He's actually gone out and said that Apple actually have threatened to remove them.
Yeah. I mean, I guess there's no real way to verify whether that's actually true or not. But that if that is true, that is kind of strange. And it's weird that they would threaten, but not kind of just follow.
We'll do it.
Just follow through with it. The thing about Apple is the thing that I think is kind of crazy is that you can't, if you're an app, you can't let people know that Apple is taking 30%. So like if you're Twitter and you're buying it through Twitter and it's like $8, but 30% is going to Apple, you can't have a little line, because this is what Facebook did, and then they got in trouble with Apple for it.
Wow.
They can't have Facebook had a little line that said Apple is charging 30% on this. It was because of marketplace sales, which Facebook takes nothing. So they wanted to make a point of, we're taking nothing. There's a 30% charge on top of whatever you're paying on marketplace,
and it's going
because
to
of Apple. And you can't link to where someone can buy it to avoid Apple's 30% fee. To me, that's weird, because that seems to me like a consumer protection, letting consumers transparently know what the fees are and where the fees are going. It seems weird that businesses can't tell people that Apple, that's why it's more expensive.
Yeah.
That if you sign up to Spotify through an iPhone versus on a computer, there's a 30% difference in the price. Yeah. So that's kind of weird. But in terms of having, whatever fee they want, I mean, I kind of side on like the free market, let the business do what they want. You don't have to have an iPhone, even though they do have quite a strong market power and position. It's not like they have a monopoly on phones or anything like that.
Yeah, it's very interesting. He also followed up with a poll. He said he polled people.
His polls.
Yeah, he does. I love a good poll. He said Apple should publish all censorship actions it has taken that affect its customers. Yes or no?
Yeah.
And 84.7% said yes. Obviously, it's going to be biased because his followers, obviously, he's saying that, we hate Apple. But still, 84.7% said yes, 15.3% said no. And that's kind of like what we were just talking about with the whole Facebook thing and adding the little line that says Apple taking the 30% cut. It is just about transparency. I feel like that's fine. That Apple should. That's the thing about Apple. The thing that ticks me off is that all their marketing and, Tim Cook is like, oh, we're about equality and about having the best products and the best customer experience.
Yeah.
And then it's just like, but like in the back of his mind, he's like, we're really just thinking, how can we squeeze you guys for more cash?
Yeah,
it's like, it's just so, I don't know. Like, I just hate it because I can see through it, but because Apple's got a cult that nobody else sees. Like, come on, guys.
Yeah.
They don't care about your customer experience. They care about making more money. They're going to charge you more in any facet of your life they possibly can.
Yeah. Yeah, it is kind of funny because, I mean, Apple started as a business with Steve Jobs obsessing over the customer experience. Yeah. And it obviously, as the business matures and they try and milk it for, as every business does, it kind of evolves from being purely about customer satisfaction to being a combination of that, but also trying to lock you into their ecosystem so that you don't leave, even if it's not it's not great, or like you have all your files in iCloud. Good luck getting that out of there when you switch phones. Like
they're essentially just trying to handcuff you.
Exactly.
Just like you can't do anything.
It's all fun and games until you try and leave, and then the door disappears.
Exactly. Yeah. Wait, what? This room has no doors. Oh my god.
Yeah.
But interestingly, Elon also threatened to make his own smartphone if he gets removed from the app store, which is funny.
Yeah,
So I wrote down a couple questions for you. I said, first of all, do you think Tim Cook would ever pull Twitter from the app store? And if he did, do you think Elon Musk would actually make a smartphone?
Yes, I think it wouldn't be surprising to see Apple pull it. And I don't know if he would make a phone, but it would not be successful, I don't think. I think it's even Google has had a very difficult time at making a flagship phone. The Pixel is very good now, but it took them many years to get very good at it. And Apple makes great phones, Samsung makes great phones, and Google is kind of starting to move into that range, but it's extremely difficult. And I don't think that he would have much success, at least immediately, at it. I think that I spoke about this with you kind of yesterday. I think Apple could very well remove Twitter. And most people will be like, that's annoying, but stay the course because it's just one app. It would kind of take, I was saying the tech giants need to unionize against Apple. They all need to, Facebook, Meta and Twitter and TikTok, they all need to get together and say,
stand together.
We're all just going to pull our own app from iPhone unless they drop the fee. And then Apple would be forced to, because people will be like, wait a second, the whole reason I use this phone is not really because of any of the Apple apps on it. It's because of all of the apps that I can get through the store.
Exactly.
So that would be kind of funny to see. But
I also, what we were talking about last night, I do kind of, I did have a laugh at what you were saying, how Elon's having a whinge now at Apple's 30% tax, whereas it wasn't like 2 weeks ago where he was commenting back to the whingers where it's like, Twitter, should be free, blah, blah, blah. And he's like, your opinion is valued, now pay $8.
Yeah.
Though this is like this, you did point this out, the hypocrisy of this a little bit, because now Elon Musk is basically going, it's not fair. Apple are charging 30%.
Yeah, it is a bit of hypocrisy also, because you can still use Twitter. Even if they removed it from the App Store, you can use Twitter on Safari. Like, so it's not, you can still use it on the phone. It's kind of the same argument as people making the argument that an $8 fee for better quality experience on Twitter is hindering free speech. It's kind of the same argument that Musk is now making in kind of hypocrisy, that, well, if they have this or they remove it from the store, that it's hindering free speech. Well, no, it's kind of the same as your $8 thing. It would just be making the experience worse. But people would still have the ability to communicate on the app. So it is a little bit of hypocrisy. There is a bit of a difference, I think, between an $8 fee and a 30% tax. But they're definitely,
but it's the same. It's the
same line of rationale.
Yeah, exactly. There you go. Alrighty. That is Elon Musk's war with Apple. Good luck. I will be watching from the sidelines.
Yes.
What would you like to talk about? Hey, Mish, should we do some, I don't know,
we could,
some questions?
I reckon let's jump in some questions, and maybe we can jump back if we, I had a couple other stories, but they're not kind of massive ones.
Oh, okay.
Australia's inflation. I'll give you this one. Australia's inflation figures came in. We now get monthly inflation figures for Australia. Hooray! More numbers to talk about.
Oh, we do we?
So it was quarterly up until last month. Now we get monthly.
Hey.
So it fell to 6.9% from 7.3%. So it's improving. And the month-over-month increase was just 0.3%, which is 3.7% inflation annualized. So the current monthly rate, if you expect that going forward, which we never know what's going to happen with inflation, but how it's running right now is quite a lot cooler. 3.7 is not too bad. We look for a 2 to 3% range. The US likes 1 to 2, so 3.7 is not too shabby.
I'll take it. I'll take it versus.
I mean, it's better than whatever
being in
the
England
UK's
right
at
now.
11%. I think Eurozone inflation came in last night at 10%, which was down, but
still,
but it's 10%.
You can't cheer at 10%, even though it's down. You can't cheer.
That is insane. Yes.
Crazy.
That's all I had on that, really. It was just a quick update. I don't want to...
Fell to 6.9 from 7.3. Okay, cool.
Yeah,
that is kind of strange. I don't really understand. Like, I don't understand this macro stuff enough to be able to say, like, why in Australia, here, there, everywhere. Like, but I'll take it. But
yeah, look, there's so many factors that go into it that it's impossible to be like, this did this. But one kind of broad theory would be that because we have so many variable mortgages, that interest rate increases have a quicker effect on consumers' disposable income. So that's slowing down people's spending quicker than in the US, where a lot of people have these long fixed rates. So even if they raise interest rates, people's mortgages don't go
change.
up, or a lot of people's mortgages don't go up. Whereas in Australia, most of it's variable or really short-term 1-2 year fixed terms.
Yeah.
So that theory kind of makes sense and plus energy prices are kind of subsiding. So the combination of those factors seems to be slowing things down a little bit. So
yeah, it's a good point actually. I hadn't really thought, but it does make sense.
Yeah. All right. Should we do some questions, or have you got something?
No, I don't know. I was just like, I could say my last story in one sentence is that Credit Suisse, remember how they needed to raise capital? Or they were like, no, we're fine. They did raise capital in the end.
Okay,
They approved a 4 billion Swiss franc capital raise aimed at financing the embattled lenders' massive strategic overhaul. But it's a very boring
Are they doing
story.
a meme stock capital raise, ape shares, or
yeah, that's it.
They've come out with Credit Suisse token.
Yeah, Credit Suisse token. Yeah, get on board, everybody. Yeah. It's going cheap. That's a very boring story. Let's talk about some questions.
All right. So I actually asked a bunch. I asked on my YouTube channel for some questions, and we got some interesting ones. So we'll jump between just regular questions from the podcast and maybe some that I had on my channel. I'll go to this first one, which is about kind of our YouTube channel. I'm curious to hear your kind of thoughts on this. If you have any insights on this, what have you and Brandon realized about YouTube that you didn't know at the start of your journeys? So is there anything that like kind of surprised you about what we do? Because we've both been doing this for 5 or 6 years now. I'm trying to think back as to like what maybe my expectations were going in and how that's kind of different to what we're kind of like what it is.
Yeah. I think I didn't quite understand the scale, like how many people watch YouTube. I didn't realize that at the start. I didn't realize that you could make a YouTube video about any topic and there will be an audience out there somewhere. You might not find them. It might take you a while to find them.
Yeah.
But yeah, you could really, and so that's why I'm always telling people, like, it doesn't matter what you care about. Like, people make slime on YouTube and those like, come on, seriously.
Yeah.
Like kids pull toys out of boxes on YouTube and make millions of dollars. So I think that's the one thing that I didn't quite, wait, what was the question? Something I didn't quite realize when I started my channel, something I've learned is that just how big the platform is, I think, generally.
Yeah.
Well, was that exactly the question? Sorry,
that's pretty much the question. So what didn't we know at the start of the journey? Yeah, what have we realized that's kind of different, I guess, to...
Do you have anything different to talk about?
I don't know if anything was dramatically different to what I expected. I think over time I've realized how much is involved behind YouTube content, like how much planning goes into videos. I think it's very difficult just as a viewer to understand how much planning and thought process goes into things like thumbnail and title.
That's a good point.
And topics that are trending and catching those topics and retention. There's actually quite a lot of science kind of involved. I had a friend of mine who recently started a YouTube channel and I was just kind of telling him all of this stuff. And it was only through that process that I started to like actually spew out all of the little things that I think about. Because normally it's just automatic. Like I do this, I do this, I do this. And I was like, wow, there actually is a lot involved that I do that it's just kind of automatic now. It's just the routine of making a YouTube video. So that's probably one thing. I didn't realize how much is really involved in the process. That's
true. I get a lot of comments because sometimes I'm a little bit late to the party with like news topics and stuff. Like it's like, oh, you're talking about FTX now, but it happened 3 days ago. Like everyone else already released their videos. Like there are some people that do just wake up, turn the camera on and have no graphics or whatever and just, oh, this is FTX. I haven't done any research, but I'm just making a video about it because I want to get this out and I want to give you, get 1 million views because everyone's searching FTX.
Yeah.
But that's just like not really what we're about. We're about learning about what's going on and making a well-scripted video that actually informs people, educates people, isn't like a half-baked kind of opinion on, this is what I think kind of thing.
Yeah.
So, and definitely once you start taking that approach where you're not just trying to follow the clicks and just jump on the trend as soon as possible, when you're actually trying to make the best possible content for that particular topic, that's when the amount of time and effort really snowballs, because you can run and gun YouTube very just basic, flick a camera on and just talk, but that's not the way I like to do it anyway. I had another point that I wanted to say. What have you realized about me? No, it's gone. Let's move on.
Yeah.
When are you guys going to open your own Berkshire Hathaway? No, seriously, what are your big dreams?
What are my big dreams? Oh, God.
Your hopes and aspirations.
That's a philosophical question.
Hamish, what do you want in life?
What do I want?
What do you want to achieve?
At the moment, generally speaking, I live kind of looking no more than kind of 1 year out, 2 years out. I mean, at the moment, I'm really enjoying my YouTube content.
Yep.
And that's kind of more of a week by week creative process than any kind of, I want to hit this many subscribers, because I think it's kind of, when you're doing a creative endeavor, it's kind of silly to be like, I have this target, 5 years out, I want to be this big. I think it's more...
Especially when your success is algorithmic and it's out of your control to a large extent.
I think you kind of have more success if you just focus on the creative process and make the best content you can, and the results will kind of just come from them. So I don't have any kind of specific milestones really ever in mind in terms of revenue or anything like that. It's really just about doing what I can to enjoy the content as much as possible. So, and enjoy the process.
Yeah.
So I don't think I have any big.
No, I don't have long.
I don't want a yacht or anything.
Yeah. I don't have any long term. I don't know. Is that bad? I feel like we should be like setting goals. Well, and we talk about like it's good to set goals, but my goals don't go out like 10 years or even 5 years, just because it's like. And the reason is because like if I look back where I was 5 years ago, and if I had made a 5-year goal. And versus where I am now, you'd be like, I'm just like completely different.
Off,
I'm like completely different.
Yeah.
So I don't know.
What we do is so dynamic as well. Like the kind of content that we're making, what teams we have behind ours, like the nature of what we do changes so quickly. It's such like a short term thing. And I mean, it would be even more so if you were, purely doing TikTok content, for example. It's just like trends are just moving so quickly. At least what we do, there's some stability, some things that remain the same year to year, but it's so dynamic that I think it's not really useful to have these kind of long goals. It's not like, if you had a typical like law career where maybe it's like, okay, I do 3 years of this and then I try and get into manager position and then I become a partner. Like there's kind of more of a natural long-term progression. Whereas for us, it's kind of just make as good as content as we can and see how it goes.
Yeah, basically. Yeah. Should we do another one?
All right. Let's see what we've got here. Here's another one on the same kind of token. We're doing a little bit more personal questions here. What made you get your YouTube channel started and the Young Investors podcast? We've spoken about this a little bit, so we won't maybe...
What did I do to get my YouTube channel, or what made me start?
What made you get started?
I just started when I started investing, really, and I remember I've told this story before, but I made a lot of mistakes at the start, and I quickly realized that the error in my ways, and I think I just started making videos about like the mistakes I'd made and talking about like, hey guys, turns out ETFs are probably not a bad thing. Like maybe you shouldn't YOLO into stocks and stuff like that. But then it just went from there. I found the creative process really interesting and fun. I liked engaging with people in the comments, and as more people watched, it kind of inspired me, and I just kept making more and more videos, and it just snowballed up over time. But I'm not a quitter. So if you know me personally, if I start a project, I always finish it. I don't really know where the finish line is with YouTube. Yeah. But anything that I do, if I start something, like a lot of people, if they don't like it, they'll stop or they won't quite get there. But that's like never been a problem for me. Like I had, for example, this is a pretty crazy example. So I always have been a Star Wars fan, and I love the costumes of the Star Wars character, especially the troopers. I think like stormtroopers and stuff. Anyway, it turns out I learned that there's this costuming group called the 501st Legion for Star Wars, where you have to make your own screen. It has to be screen accurate costume, and it has to be perfectly screen accurate. So I went down the deepest rabbit hole. I bought this kit. So it came like vacuum formed plastic, and I have never built anything like this before. And there's no instructions. You just get sent this kit, and you have to paint it and everything yourself. And you have to like sand it, and you have to like glue shit together. And I just had no idea what I was doing. Anyway, I was so out of my depth. I got this kit. For those wondering, I made a episode 3 Coruscant Senate Guard Trooper, the red ones. Yeah, that's right. But no, it took me like 4 months, and there were so many points along that journey where I was like, I have no idea. Like, how am I going to do this? I have no idea what I'm doing. But I still did it. Like, I don't know. I just kept waking up and I just worked on it every day. I never thought I could get to the finish line. Then I did.
Wow.
So there you go. Anyway, so that's how I started my YouTube channel.
I mean, that definitely helps in YouTube because we have no idea what we're doing half of the time.
Yeah, it's so true. Just waiting for the news to happen.
Yeah, exactly.
What
was the question?
Started?
What got me started? Yeah, I think, I mean, similar to you, I just wanted to have like kind of an outlet to talk about investing, I guess. And
that's probably how the Young Investors podcast came about for both of us.
We wanted an outlet. Exactly. We were kind of looking for people with similar ideas in the space, and why not? I mean, there wasn't really that many, I didn't know anyone in the Australian finance space besides you when we got started. So it kind of just made sense to do that. But I definitely have that creative side, like the kind of both sides. Like I like the analytical side of investing, but I definitely have this strong creative side, which YouTube seems to, if you have kind of an obsession with any kind of topic, plus a little bit of creative interest in kind of film and that sort of thing, then YouTube is kind of perfect combination of both, where you can kind of exploit kind of both of those things. And it is just interesting, YouTube, because I mean, with most careers, you don't get constant feedback. So YouTube, for better or for worse, you kind of have a constant log of how you're performing, which is bad when you kind of have declines.
When you're stressed.
Your emotions are kind of like this all the time. But it is good because it's when you're growing, it's easy to keep track of what you're doing. Rather, in a career, you might spend 2 years in the same level job, and it's like, am I really making any progress? You don't have that kind of, you actually are you're 80% of the way to getting a promotion. There's no one's really telling you that in most jobs. So that's the benefit of, I think, what we do is it's very easy to kind of stay on top, and there's like little ticks along the way of like, you hit this milestone, you hit this milestone.
Yeah, no, that's true. All right, I'm going to send you I'll send you an investing one.
Okay.
Hey guys, I was hoping to get your opinion on when to cut your losses on a bad investment. I hate the idea of locking in a loss, but I also don't want to waste a buy opportunity elsewhere. Right, so this is like when you cut your losses for another opportunity. Do you have any kind of thoughts on that?
I think you have to be completely, the market doesn't care what price you bought it at originally, so you've got to be completely, we won't worry about the middle camera.
No, okay.
You've got to be, what was the question again? I lost
it was, hey guys, I was hoping to get your opinion on when to cut your losses on a bad investment. I hate the idea of locking in a loss.
Yeah, so you've basically got to not care about what price you paid originally. So don't look at the return and be like, maybe I'll just wait till it gets back to break even. That's completely irrelevant. The market doesn't care. The business doesn't care what you paid for it and what return you've made. All that matters is what does the business look like right now, and maybe the price of it if it is a good business, right? Yeah. So you cut the loss as soon as you realize either, well, for me, has it fallen outside of my circle of competence? Does it no longer have a competitive advantage? Is the management team, has that changed in a negative way? If anything fundamental about the business has changed, you just cut it, and you have to be emotionless about it. And it's very difficult to do that. I've had 2 examples in the last 12 months where I've kind of emotionally waited before selling something that had fundamentally changed. And in both cases, it was a mistake to do so. Right. ASOS and Meta, in my view. So cutting them as soon as you have doubts, especially if you have a better investment opportunity, then go for it.
That's Monish Prabhai style. Like he was in Alibaba, he took a big loss, but he did the math. You just got to do the sums. You got to figure out like what's your expected return out of this stock versus another one, and he sold Alibaba at a loss. You do get a kind of a benefit because you get to, you get the tax write-off, but and then he sold out of Alibaba and he put that money into Tencent instead. And you just have to be emotionless. You just have to just be like, nope, just look at the nut, figure out what have you done? What's the digging? What's the growth rate? What's your discounted cash flow? Like, what are you going to get out of this? All right, it makes sense now for me to cut my loss and put it somewhere else. Or I mean, I wouldn't sell at a loss just because you're at a loss if you didn't have anywhere else to put it, if you still believe in the company and stuff. But yeah, definitely.
Yeah, that's actually a really good point. Only sell if there's something fundamental has changed. I mean, if you're just strictly at a loss and saying, this is a losing stock, that's not the case, right?
Yeah, not the time to sell.
There's so many times, almost every single time I've bought a great company, the stock has gone down first. The stock's movement is completely irrelevant. You have to understand the business. And look to the business and ignore what the stock price is.
So this is definitely not like, unless you have something else to buy, there's not like a rule like, it's gone down 30%, I cut my loss.
Yeah, it's a good point you mentioned that.
No, we're talking, and the question does go into that. It's like, what about if I have an opportunity elsewhere? Yeah. All right. Should we do one more?
Yeah, let's squeeze in one more.
Okay, sure. Do this one.
Okay.
Oh, I don't know. You do it. Pick whatever one you like, I guess.
Okay. Hey guys, been following the podcast and YouTube channels for the last 3 months now. Well, thank you for tuning in.
Yeah, cheers.
I'm really struggling to find companies I love for value investing. Most of them are privately owned. Any tips? It's kind of funny. If companies don't have to go, just before we answer this question, if companies don't have to go public, then they won't because it's more of a headache. And you see that with, big businesses like IKEA and Red Bull and Lego. These are incredible brands and they don't need to go public because they've got money, right? You go public to raise capital. So.
Yep. And as soon as you go public, you have to, answer the phone every 3 months.
Yes.
So exactly right. But yes, so the question how I'm really struggling to find companies I love for value investing. I think just go back to that exercise that Phil Town does in his books. I preach it as well. Don't try and like search for companies like, oh, maybe that. Just go back to like where do you spend your time? Where do you spend your money? What are you good at? What are you passionate about? What are you interested in? Kind of do that Venn diagram and just figure out what things are consistent. And then after that, you can just Google like video game. I play a lot of video games. I, spend money on video games. I spend my time, I love it, passionate about it. I'm not good at it, but we're getting there. You just type in video game stocks. Okay. So video games, you're going to have a natural understanding of how that industry works just by the fact that you play a lot of video games. I mean, maybe you don't understand the business yet, but that's okay. That comes down the track, but you get video games. You get it. So then just look up video game stocks. You get Take-Two Interactive, you get Activision Blizzard, and you start to look into these companies. And that's how that's how I go about not finding company. I don't go, oh, great, Activision Blizzard, Take-Two Interactive, invest. That's not a shopping list. But that's your start point to then go deeper and say, is there something here? Is this an interesting business? Is it something that I can understand? Because it's definitely hard when you feel like you're trying to search, you're trying to find a stock to invest in. That's I don't think that's the right way to go about it. Because remember, a lot of investing is just patience as well. So a lot of the time you won't find, you'll do this exercise, find all these companies in your circle of competence, but they won't be at marginal safety prices. You won't invest in them. And that's fine. That's like most of investing. It's just like going in, doing the research and just getting a slap in the face. It's been like, oh, bugger.
That's exactly what I was going to add was, it's okay to struggle to find good investments from time to time. I mean, I went all of 2021 without really making any substantial investments. Right. I think I've made one substantial investment this year. So, they're very, especially if you're doing value investing following kind of Charlie Munger style principles, Warren Buffett style principles, then you're investing very infrequently. So if it's only been a couple of months and you haven't found something, I go through 3-4 months without investing in anything new all the time. Almost every 3 to 4 months I'm not investing in anything.
Oh, what's that? I didn't do anything.
Like the last thing I bought was in April. So that's a handful of months ago already. And before that was in the beginning of 2020. Or like
I don't think I've bought anything since 2020.
So look, that's the nature of investing is you find rare investments. ETFs. And then of course consistently we're adding to ETFs as kind of a foundation of way to put money into the market regularly. But in terms of value investing, it can be very very spare. But focus on areas you love and just because those are the areas that you'll be willing to put in the hours to research. So
for sure. All right, dude.
All right. I think we've done, how long have we been going for? Just over an hour. So we'll wrap it up there. Thanks everyone for tuning in. I hope you guys enjoyed this in-person episode. We'll try and do more of these. I say this every single time we do an in-person episode, but I will come to Canberra and we will do one.
Still waiting. 3 years later, still waiting.
We'll see. Maybe we'll lock it. Maybe 2024. What do you reckon?
I don't know.
No, we'll, thanks everyone for tuning in. As always, I hope you enjoyed the episode and we'll be back next week for regular programming, maybe?
Regular.
Regular programming. All
Sorry
right.
if there was an echo in this one, by the way.
Yes.
Hopefully it's not too bad. Hopefully Andrew can work some wizardry. Or something. But appreciate you guys tuning in. Thanks for watching. We'll see you guys next week.
See you guys.